Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday, 4th of December. I'm recording the video today, 8:45 p.m. Eastern Standard Time. We've got a new high that was expected, and downwards movement remains above the invalidation point at the hourly chart level. The target remains the same, 2087 to 2089, and if it's met next week, then this minor degree fifth wave may exhibit a Fibonacci duration. So I'm looking for that target to be reached next week. In the very short term, I expect a wee small increase in upward momentum over the next couple of trading days. At the daily chart level, this is the wave count, and primary waves 1, 2, 3 subdivide 5, 3, 5, so they're seen in exactly the same way as primary waves A, B, C for the bear wave count, because they subdivide 5, 3, 5. So the target's the same, the structure in here is the same, the structure on the hourly chart is the same, and the invalidation points are the same. Eventually, when we have a sizable trend change confirmed with a breach of the lower of the two aqua blue trend lines by a close of more than 3% of market value, that's when we'll have a trend change at either primary or cycle degree confirmed, and then we'll have price confirmation with a new low below 1820.66. While price remains above the two aqua blue trend lines, I'll expect that any downward movement is just a second wave correction within minor wave 5. So once we start to get some downward movement at the hourly chart level, my initial wave count will move everything within minor 5 down 1 degree, and I'll expect that downward movement would just be a smaller second wave correction. I'll take that approach because we should always assume that the trend remains the same until proven otherwise. The target remains the same at 2087. My subminuet wave 5 will reach equality in length with subminuet 1. Because there's no ratio between 1 and 3, I am expecting to see a ratio for the fifth wave, and that's the most likely, most common relationship for the fifth wave, so the lower edge of this 2-point target zone has a good probability. Just 2 points above that, at 2089, minuet wave 5 will reach 2.618 the length of minuet wave 1. This fifth wave is a long extension. It's already past equality with 1, it's past equality with 3, it's past 1.618 the length of 1. So the next ratio to calculate a target is 2.618 the length of minuet 1. There are already Fibonacci ratios between the first and third waves at minute degree, minor degree, and intermediate degree, so the target is best calculated at these 2 degrees, minuet and subminuet, which is what I'm doing. I expect upward movement to continue to find resistance about the upper edge of this black channel. Every day in the text article I link back to a prior analysis with a weekly chart where I show you how to draw the black channel and the aqua blue trend lines. Eventually when we see the end of primary 3, primary wave 4 should break out of the lower edge of that channel because the fourth wave should breach a channel containing the third wave. Let's have a look at the hourly chart level, where the high of subminuet 1 within the extending fifth wave is this point here. So we have an impulse for 1, an expanded flat for 2, an impulse for 3 with no ratio to 1, a zigzag for 4, so perfect alternation between 2 and 4. Initially, within this last little piece of movement, I'd initially thought maybe it was 1, 2, 3, 4, but looking at 4 and 2, there's no alternation. They both subdivide as zigzags on the 5-minute chart, although 2 has a truncated C wave, and they're both just about 61% of the prior upward wave, so they are of a very similar depth. So I don't think this is a fourth wave counterpart to the second wave, because I would expect to see alternation between them. So I think what's more likely is we have a series of 3 overlapping first and second waves, which means for the S&P the next move up should be a third wave within a third wave within a third wave. We should see a wee increase in upward momentum, not stronger than that seen within the prior third wave a couple of degrees higher, so not to beat this momentum, but to increase a little bit, maybe to get kind of close to this, but not to be stronger than that. We should still continue to see divergence between price and MACD as we get up toward the target. Draw a channel around this extending fifth wave using Elliott's second technique from 2 to 4 and then place a copy on 3. Look out for the fifth wave up to find resistance about the upper edge of that channel. When eventually microwave 3 is a completed impulse, then a following fourth wave correction can't move back into first wave price territory below 2059.18. That's all from me today with your S&P analysis, and I hope that all our members are having a fabulous day.